Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our stock market weekly recap for the 31st of December 2018 into the 4th of January 2019. So if you are brand new to the channel, I do make stock market, personal finance, real estate investment videos every single week, so consider subscribing. And if you have any comments, questions, you have some information that's not covered in these videos, drop it in the comment section below. I always enjoy reading and replying to all your guys' comments and just finding out more information. And of course, if you do enjoy the video, find it helpful, hit that thumbs up button below. It always helps the channel, and I appreciate all you guys out there who are viewing and subscribing to the channel. And we're going to be covering the four main indexes, the emerging markets, stock futures. We're going to look at the S&P 500 changes for the week. We will look at oil, dollar, silver, gold, and bonds and kind of wrap it up there. We do have some information here, but we've already covered much of what we posted over on Facebook this week. I made a little snippet here kind of going over Apple, what I believe will kind of happen going forward, and then the total changes for the week. My portfolio, this is actually incorrect. I actually lost about 0.45%. My thrift savings plan didn't update until the end of the day, so it hadn't adjusted for the run up here of the S&P 500 on Friday until when I had looked at it later in the day. So far, let's go ahead and just start. S&P 500 year to date up 1%. During the week here, we only include Wednesday, Thursday, and Friday for our year to date. So Monday does not include, it's not included in our year to date, but it is included in my weekly change. So weekly change, the S&P 500 is up 1.44%. Now, we don't include Monday's gain there of 0.85%. So year to date, they're only up 1%. Now, the Dow Jones here is up year to date 0.45%. Again, we don't include that increase there on Monday of 1.15. But for the week, as far as what I'm tracking for the week, the Dow Jones went up 1.59% during the week. Now, the NASDAQ here, this is second place right now, up year to date 1.56%. Now, we had a nice run up here on Friday, and I saw a lot of investors jumping out of these tech stocks because they got a little bit scared here during the day, but they would have missed out on this very nice gain here on Friday. I also had some comments in the last video I just kind of posted that they were buying up the leverage TQQQ fund, and they made a nice 13 or 14% return here on the date. So if you were one of those that were dropping me comments on that, congratulations on that. And the Russell 2000 here, this is up. This is our winner currently year to date, up 2.39%. So this is showing a 5-day change of 3.2%. But again, we're not including last Friday in our weekly, and of course, we're not including Monday in our yearly up to date. So again, up to date 2.39%. But for the actual week, it is up 3.15%. And then my portfolio was down around 0.15%. And my portfolio is not just M1 Finance. It is my Merrill Edge IRA, Roth IRA. It's my wife's taxable account, her Roth IRA. It's my Roth 401k. It's my thrift savings plan. It's all of our invested capital that I'm sort of tracking, and then I subtract our contributions that we made for the week and kind of show the differences there as a percentage wise. So emerging markets also pop it up here along with the market. So this is showing at 3.22% here on the day, year to date up 1.61%. Kind of an interesting one there. I don't know many investors who are invested in the emerging markets. If you're one of them, drop me a comment in the comment section below. I would be interested to know who is invested in the emerging markets there. Stock futures are currently looking negative right now, and I wouldn't expect anything else, especially after the gap up that we've had. Markets closed here on lows on Thursday. Fed came out here, really pushed that market up high. It had already gapped up over 3% here from close of Thursday to open of Friday, and then Fed came out putting sort of a base on the market, and it continued higher here on the day. So let's see, where were we? Back over to our futures. So depending on how news comes out here on Saturday and Sunday, this may cause stock futures to either rise or fall. I'm hoping that the market really does pull back a little bit more. My main deposits go in on Monday. If the market is showing better signs of weakness through the week, I may hold off on investing my capital here on Monday and just kind of wait for some news to kind of drive it lower. But we shall see. So we'll see how that kind of plays out here towards closer to Monday. General Electric was moving up very high here in the after hours, up 3.77%. Not a lot of other known companies here that I follow and track. Ultra Beauty, I know that one's been kind of shown on a couple other channels. Here, the most active stocks here in the after hours, PCG down 19.22%. That's a huge loss there. Not a lot of anywhere else. So not a whole lot. Sprint going down 0.97. They're supposed to be doing their merger with T-Mobile here soon. So it's kind of interesting. Again, General Electric there towards the top. Oracle, not everything, most active. Lots of this showing flat. So it's kind of interesting. Now, S&P 500 for the last day of the week here, we see a lot of nice performing stocks here. Apple, Amazon, Microsoft, Google, Facebook, Bank of America, everything. There wasn't really a sector out there besides auto parts that were really in the negative here. I see a couple financial REITs here, but even those were sort of mixed. We had some positive, we had some negative. So automotive part stores, those are probably the ones that were in the negative here on Friday, the only ones. My portfolio on M1 Finance was completely positive. I don't think I had one negative stock there for the day. Now, for the week here, we can see here Apple still down 5.05. This one really hurt my portfolio. So here, where I'm down like 0.5% for the week, that is mainly because of Apple. Apple is a big portion of my IRA over on Merrill Edge. It has came down quite a bit since their highs. I've held Apple from, I purchased it at 164, rode it all the way up to 233, and now I'm holding on to it here at $148. So I do expect Apple to recover here in the future. It's just a waiting game, and in the meantime, it is going to be paying out some dividends. Now, a couple areas there I like to see positive here are financials. Financials and tech are what's going to sort of push the market higher in the year. 2018 was a bit of a sloppy year. We ended it in the negative. So depending on how earnings plays out here in 2019, what sort of political mess we kind of get ourselves into, trade war and so on, that's going to play a big factor on how 2019 sort of plays out. So we shall see. But currently, starting the week off positive, all indexes here in the green. Financials, I did track this here, 5-day change, 2.84%. But again, Friday, you take that away, and they're up right around this or higher. So very interesting. Year to date, they are actually higher than the S&P 500 there, and the Dow Jones, and the NASDAQ even. So very interesting. I don't know if that'll continue on higher into the year, or if that'll begin to kind of pull back. So let me know in the comment section, what do you guys think? Do you think financials will do fair in 2019, or do you think they will, have some terrible performance as they had back in 2018? Homebuilders, again, gapping up as well. I think this is all due to Friday. Friday, the Fed came out really putting out some positive numbers and information, and that made a lot of investors happy, obviously, because the market just jumped up crazy here after the announcement of the Fed. You can pause and read through the news here, but oil actually did fairly positive this week. This week, all positive across the board, so I remember that. So it's kind of interesting. I had fell to a point here of $10.18. This is ticker symbol USO, by the way. I had a couple comments asking me, what's a good ETF to kind of track oil or be able to buy into it. So USO is a good one for that. If you guys are interested in that, up 5-day change, up 6.82%. The dollar after New Year's, it did gap higher here after New Year's. Now after that point here, it began to sell off. Now I'm not 100% sure as to why the dollar had such a gap up here after the New Year's, and why it kind of trended back down to a normal state there. So kind of interesting there. If any of you guys out there are forex traders, trade the dollar, have a little bit more information as to why that is gapped up by X amount, and then kind of fell back. You guys can let me know as well here. Silver continuing their trend higher, 5-day change up 2.15%. So even today on Friday, when the markets were up over 3%, silver did not fall back. Silver was actually flat. Normally on these market days where the market gains 3-4%, you'll see silver drop back by 1 or 2%. That is just, we can see some. Silver did sell off here earlier in the day, but it got quickly rebought back up. So lots of movement here within the silver. Taking a look here at gold. Gold did fall here slightly down on Friday. 5-day change. It's still positive here. Yeah, it's still positive. With Thursday, Thursday sell off in the market, and then Friday's gain in the market, it kind of flip flopped here over in gold, but still positive for the week. Bonds 5-day change ended up positive here, 0.54%, year to date at 0.29, and prime rate remains the same here at 5.5. The 1, 2, 3-year bonds, I still have not found a page for that, but I will get that all sorted here in the future. And we already sort of saw Apple the weekly change here for Apple is down negative right now. And that is basically all I wanted to cover in today's video. I wanted to make it as quick as I could. I've made a post. I shared a post over my Facebook page as to why the Fed, why the market kind of gained so quickly here. The Fed came out with their numbers, also talking about, the job market still is very robust. Lots of jobs are being created. The Fed's actually looking at the stock market and sort of coming up with a flexible plan of, instead of hiking rates 3% or 3 times in 2019, kind of pulling it back, maybe doing it 2 times, and also doing some sort of a plan where they may increase, may decrease. That's still up for what exactly is going to happen. So lots of stuff here kind of going on. That article will be available on my Facebook page. I will have them in the description below, as well in the comment section if you guys want to read that out. So that is it. If you guys have any comments, questions, you want to drop me some more info, drop it in the comment section below. If you did enjoy this video, find it helpful, hit that thumbs up. And of course, if you are a brand new viewer, hit that subscribe button below. I cover the stock market, personal finance, real estate investing, so check it out. And that is it. Thank you all for tuning in. I will see you next time. Have a great day. Bye.